Welcome back. So quiet for the markets. Let's invite Nilesh Shetty, Portfolio Manager at Quantum Securities, on the show now. Nilesh, they say that the best time to accumulate stocks is when the consensus perhaps is not very optimistic and not very bullish about big returns. We've gone through a long period of consolidation. In fact, since October and the highs that we hit in October, the Nifty is down more than 5%. The small caps and the mid caps have corrected and seen a double-digit correction. So now perhaps is a good time to go ahead and accumulate. What are the stocks on your buy list? And can you give us your top three stock recommendations?
Yeah, I may not be able to speak on stocks since we're a portfolio management company, advisors. But that is correct. There is significant value in the market. The 5% correction is not much given the rally that has unfolded post the COVID bottom. But there are sectors available with substantial discounts to their long-term averages. The biggest of them remains BFSI. So banking sector has underperformed significantly in the rally. And you see private sector banks, they are still far below where they were trading pre-COVID in terms of long-term valuations. So we do have a large allocation there. The two-wheeler space again remains a deep value sector, which because of certain regulatory changes, volumes are where what they were reporting 10 years ago. It's not that two-wheeler demand is collapsing in India. It's just that market is or the demand is getting used to the new price levels, and it will turn around at some point. And some of the fancy sectors of sort of 3-4 years ago, which now nobody wants to look at, including insurance and broking, you are seeing stocks available at deep discounts there. We are sort of looking to add stocks from these sectors to our portfolio.
That's an interesting one, Nilesh. Insurance. So you're looking to, pick up bargains, considering that the market's quite disenchanted with these stocks. So is it life insurers, or are you also looking at general? And since we're on the subject, I just wanted to get your thoughts on, this whole motor insurance move. There's some chatter that perhaps the government could look at issuing policies, on the spot, at least third-party motor policies. Could this be a big kicker for companies? I mean, there's only one big listed play that we're talking about in the general insurance space. But your thoughts?
Yeah, I mean, whatever regulatory changes are happening and may happen in the future, the structural story is that Indians remain underinsured is not changed. And there is a big catch-up due as we evolve. So there is no doubt, nobody doubts that the insurance sector will grow. It is what kind of valuations do you want to pay for that growth? So a few years ago, people were willing to pay the sky for these companies. Unfortunately, they've been disappointed, and now they're available at deep discounts to those valuations. We think current valuations are fair. We think there is significant value. If you're patient, I think especially on the life insurance side, the fact that they were being sold as savings products and not as insurance products, that shift is now happening where people will eventually start buying it for insurance. And the world over, people buy it for insurance. They don't buy it for savings. So it's not that Indians will not buy life insurance products purely for insurance. So at a certain valuation, I think both the sectors, life insurance as well as general insurance, make sense. Existing listed companies, and I expect a lot more companies to come through in this space. It's a very competitive sector. Most of the companies are in the not listed space, but they will come through. I think there are an interesting lineup of companies due for listing, and I think that space will get broader, and you will get decent companies at valuations that you are comfortable.
All right, that is on insurance. Nilesh, thanks for joining us. This is Pavitra. What is your call on the metal space now? We're talking about an over 20% kind of cut for the year. Would you look at any of these stocks at these lower levels, or you think it's still a complete avoid?
I mean, metals had a fantastic rally post the COVID bottom, and typically these stocks tend to do well for a couple of years, and then you have 4-5 years of downturn. Our sense is that peak has already been hit in the commodity space, unless something dramatically happens over the next 1-2 years. I think allocating more capital perhaps is not advised. So the valuations still not, so they've corrected, but not as much as they should, assuming there is a recession in the West. So there is no value as such in the space. But if you see companies starting trading at deep discounts to their book value or replacement cost, then they get interesting. You might have to buy and wait for the next upcycle to come through. But right now, they are somewhere in between in terms of valuation. So there is no great value for an investor to buy and wait for the upcycle, which may happen in the next 3-4 years later.
Nilesh, pharmaceutical sector and healthcare has seen a deep correction. The earnings have not been great. Many of the companies have been hit on account of pricing pressure in the United States. At what point do these stocks appear attractive to you, or do you think they're in for further correction? How would you approach the healthcare space?
Yeah, some of the stocks appear that the worst is already factored in. But like I said, there is no near-term catalyst available in these stocks. You might have a couple of years of painful period where you will have to wait it out. But if you're able to buy a quality company and then have the patience to wait it out for the next couple of years, you still might be able to make your long-term average returns in these stocks. But like I said, just the lack of catalyst in the near term is what is sort of
Healthcare in India is diagnostics, it's hospitals, it's the generic companies. In which pocket do you think the worst is over?
Yeah, we primarily focus on the pharmaceutical space. The other sectors, diagnostics and hospitals, they've always been priced for the moon. So in a value style, we've never been able to justify their valuations. Diagnostics has gone through a significant correction, but still valuations remain very, very elevated. And there is significant competition coming in that space. So at least for us, we've had allocation to pure pharmaceutical companies and not so much in the other healthcare bucket.
Okay, all right, Nilesh, we will leave it on that note for today. Thank you very much for joining in. Great chatting with you as always. We'll look forward to the next one. Well, with that, we will, get into